Google just reported their latest quarterly figures and a beat across the board. This company is not dead and not even close to it. What a surprise, right? As if we did not talk about this company enough on this channel in the last couple of weeks. Now, Google right now is up 4% after hours. If you look at the forward PE, it's 21.2 times going into this report. I mean, compared to all the other companies that we've seen and researched and even the Magnificent Seven, this was just a joke, right? Yes, okay, you could say that maybe 5 years from now, search is going to come down. Their dominance in search is going to come down because of the rise of all the other players, right? All the Perplexity, Gemini, well, not Gemini is their own, but yeah, maybe it can cannibalize actually. Grok, ChatGPT, Claude, you name it, Meta AI specifically. So yeah, okay, maybe. But as you will see, there are other business segments inside of Alphabet, Google that are growing quite quickly and becoming very, very profitable for them. So currently, this is the big picture with regards to pricing metrics: forward PE, EV to EBITDA, price to sales, price to free cash flow, price to earnings to growth. I mean, I bought a little bit of Alphabet before they reported earnings. It's a bet, of course, it can go up, can go down. Now it's currently up 5.15%. Semi-guidance is usually given during the earnings call, but don't expect much. So before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we're going to cover AMD as well after their earnings call, so we get more information with regards to the AI revenue. So stick around for that. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's see what has happened this quarter. This is from Consensus Guru's great follow on X. So basically what we get here is almost a beat across the board. Two misses here. One, the traffic acquisition cost, a miss by 1.1%. So basically analysts were expecting it to be a little bit less. And then free cash flow is a big miss by 22.6%. More on that later. Now, if you look at all the rest, gross revenues for search, YouTube ads, total advertising beat by 0.6%, okay. Then if you look at total services, beat by 1.7%, operating income beat by 7%, and that's up 33.6% year over year. Cloud beat by 76.2%, and that's up 632% year over year. We know why it's started with a small base, why it wasn't profitable, became profitable, but very, very small. $266 million last year. So, okay, makes sense to have those huge jumps. Now, diving a little bit deeper, we first start with a comment here from Sundar Pichai. I still think that he's not a great CEO, but okay. The momentum across the company is extraordinary. Our commitment to innovation as well as our long-term focus on investment in AI are paying off, with consumers and partners benefiting from our AI tools. In search, our new AI features are expanding what people can search for and how they search for it. In cloud, first of all, let me touch on that again. Our new AI features are expanding what people can search for and how they search for it. Well, it would be nice to search for something and you actually giving us what we search for, especially if it's one of the most popular podcast episodes on the planet. All right. In cloud, our AI solutions are helping drive deeper product adoption with existing customers, attract new customers, and win larger deals. And YouTube's total ads and subscription revenues surpassed $50 billion over the past 4 quarters for the first time. Yeah, people are sleeping on the underlying businesses here. They always think, oh, Google is just search. Yes, it's true, it's their largest segment, but all the other segments are growing quite fast and are very, very profitable. Closing out here, we generated strong revenue growth in the quarter, and our ongoing efforts to improve efficiency help deliver improved margins. I'm looking forward to driving more advances for consumer, customers, and creators globally. So, revenue increased 15% year over year. On a constant currency basis, that increased 16%. Operating margin is now 32% compared to 28% same quarter last year. As for net income, now at $26.3 billion, and diluted earnings per share $2.12. If we look at the growth trajectory, revenue, gross profit, operating income, you can clearly see an acceleration in the last couple of quarters. Then looking at the different business segments. So we've got Google search and others, like I said, still the biggest by quite a lot, $48.38 billion. YouTube ads, $8.92 billion, and Google network, $7.54. So Google advertising as a whole, $65.85 billion. As for Google subscription platform and devices, now at $10.65 billion. If you look at Google Cloud, $11.35 billion, and that has increased by 35%. As you can see right here, Main Street data with the very, very quick turnaround, 35% growth. Now, I do want to say, and 9.1% quarter over quarter, but I do want to say one thing is that 35% year over year increase is amazing. But I do want to say one thing is that Q3 2023 was quite weak. So it's an easy year over year beat. As for YouTube ads, that has grown by 12%. Yes, slowing down a little bit this year over year growth. So we went from 21% year over year growth in Q1. But again, that was against a very, very weak quarter. Then 13% growth last quarter. And now we're at 12% year over year growth. And the same quarter last year that also increased 12%. In Q4, which is usually the strong quarter, so last year, Q4, that grew 16%. Let's see what happens this time. Looking at operating income, so Google services, still the biggest by far, $30.85 billion. Google Cloud closing into $2 billion, so $194.7 billion. And if you look at that trajectory here, I mean, yeah, it's been unprofitable for a long time. And then here, Q1 2023 started to become profitable. And then, yeah, then it's just growing and growing extremely, extremely fast. Then you've got the other bets and the alphabet level activities. You reach $28.52 billion of income from operations for that quarter. As for free cash flow, it's lower than expected. The expected number was just above $22 billion, came in at $17.63 billion. Now, if we do a quick reverse DCF here for Google Alphabet, we plug in the free cash flow trailing 12 months. That's reaching $55.82 billion. We put here the terminal growth rate of 4.26, basically the 10-year yield. Then discount rate 8.22, that's basically taking terminal growth rate plus implied equity risk premium. You reach that number. So the implied growth rate to justify today's price is basically 8.6%. So free cash flow has to grow 8.6% for the next 10 years. Is it achievable? In my opinion, yes. I think Google is still going through some efficiency phases. I think they can be way more efficient than they are today. Of course, it's up to leadership to change that, but I think inside the company, especially with AI optimization, cloud growth, profitable growth as well, I mean, big profitability profile with regards to the cloud business, I think this number is achievable and maybe even more. Now, of course, as we've said at the start of this video, yes, you could make the case that maybe this is already too much because, well, their search, their cash cow is getting attacked by all sides right now. And so in the future, that might generate less cash flow for the company. Okay, could happen. So far, I don't think we have seen any signs of that happening. Of course, we can talk here 5-10 years from now. Maybe that will change, but I don't think Google is standing still anymore and hasn't been for quite a while. Plus, like I said, there is YouTube, there is Google Cloud. You've got some bets with Waymo, for example. If that's successful, they can scale up. That's also a $100 billion business, probably more as well if it is successful. So yeah, that's basically it. And so looking at the graph right now, we can see here on the weekly that we did touch on the 50 and the 20-day moving average. We quickly went back up and now we're at 178, close to $179, which we were here in July 2024. And of course, I mean, that's going to be quite a big green candle. RSI is going to be quite high. I'm not sure if it's going to be overbought just yet. And then once we're there, let's try and stay there and then maybe try and go and reach those all-time highs. Now, of course, a lot can change. For example, if this presentation, or I don't know if it's going to be a presentation or not, but if this project Jarvis is not going to be successful or it's going to be as the last launches that they made, last presentation, then that might hurt the stock as well. On the flip side, if it is successful, then that would be great. It's basically this. Google is reportedly developing a computer using agent AI system. Basically a system that, well, you feed it something and it can see what you see on your computer screen and then search for stuff, maybe book some tickets, etc., etc. Could be very cool. I mean, Project Jarvis is already quite a cool name. It says here Project Jarvis would take over a web browser to carry out tasks on users' behalf, basically becoming a Jarvis from Iron Man. But the last time I got very excited about a project from Google was Project Ara, that modular phone, right? If you want to upgrade your battery, you could just take one piece out and change it. Want to upgrade your camera, you can change that as well. Well, guess what? They killed it. It's now in the Google graveyard with the hundreds of other projects that they killed off. So yeah, we'll see what happens with that. But overall, in my opinion, very, very good report by Google Alphabet. No, this is not a dying company, far from it. Of course, do share your thoughts down in the comment section below. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.